What is up, crypto friends? Let's talk about Bitcoin. This is a Bitcoin trading video, and got my chart on the screen. It's got all kinds of colors. Don't let that intimidate you. Let's break this down one at a time. So we're gonna start with the 1 day, and we're gonna work ourselves and our way backwards. And I've just got some areas of significance kind of drawn out here, and some lines. Okay, some of these lines matter, some of them really don't. Some of them are just like order book, like all these white ones are just the order book data, and then yellow one is order book data. Yeah, so white and yellow are order book data, and purple is more long-term lines, like this 12,904, 11,490. It should be 477 actually, but yeah, can't always get the exact number. Excuse me, no, that's right. That's 11,498, and then this one should be 9,477. So anyways, those are significant, and this big box in the middle is just order block data. So I am on the perpetual swaps, basically the perpetuals through BitMEX, and that's because that's what I trade. So mostly trade margin on Bitcoin and ETH. So anyway, been a while since I shot a video. I wanted to show you this and break down the structure. I think a lot of people make trading way harder than it needs to be. I know that I did, and then because it was so shrouded in mystery, I just assumed it was hard. And because there's like a million books that you should read on Wyckoff and Williams fractals and, you know, oh my gosh, wedges and patterns. The thing that you can do right off the top is you can assume that most of the patterns are just, you should probably ignore. Most TA you should probably ignore because most TA doesn't work. The guy who made Williams fractal, William himself, said many times, go look him up on YouTube right now, Williams fractal, you could just look that up and it would show this guy talking about how TA doesn't work. If TA worked, everyone would be rich. So 99% of traders lose, TA doesn't work. Okay, so the most obvious stuff doesn't work. Like, oh, it's a M, so it's going to go down more. On a 1 day, like everyone can see that. They can see that from space. And it's not really even that pretty of an M in structure. But anyways, my point is that patterns you should probably just ignore. So how I look at things is very simply, and I wanted to share that with you, is I look at things in terms of an impulse up, and then a shock wave. Okay, so an area of ranging. So it's like this is called a wedge, right? People call this a wedge or a pennant or a channel, right? You got an upwards channel or a diagonal, whatever, right? There's a million words and terms for it. They all suck. Just call it what it is. It's a wave. It's a wave formation, and at the end of it, when it gets pinched and crunched all the way down, squished, it pops and it goes one way or the other. That's it. That's the simplest explanation. So it's like, look at this, right? We had, going back to December, this is just accumulation. That's the next thing I want to, why is this over here? Let's get rid of that. The next thing, excuse me, next thing I should probably mention is that there's 4 phases to a market, okay? Accumulation. There is a markup period. There is distribution, and then a markdown period. That's it. 4 stages of a market. Like basic market cycle and market structure stuff, like everyone's lacking this, and it's crazy how hard it is to find all of this, really. Yeah, it's just mind-blowing, really. So anyways, accumulation is when everyone's buying with because there's a ton of supply. So demand starts to go up in a big supply zone, which is right down here, huge supply zone, right? And it sat here until supply ran out. Then price broke up. Okay, so yeah, so as demand kept going, supply dropped, and then we broke out. So basic economic principles you should probably study too, like supply and demand, returning to mean, just like economics 101, okay? And then there's a breakout period, and then there's distribution, okay, where people take profits, and then there is a markdown period, okay? And we are just starting the mark-up period, believe it or not, okay? So that was your low. Your all-time low was December, this day right here, December 16th, December 17th, 2018 was the low. That was the bottom. Okay, so your bottom is in. I don't even have this tagged. Shame on me. Horizontal line, we'll just pop that guy in there. Bang, right there. I don't want green though, we'll go yellow. So everyone knows. Okay. Yeah. All right, so impulses and shock waves. Or waves, whatever you want to call them. Okay. This is a shock, this is an impulse. It's a shot of caffeine. It's a shot of life. It is epidural, bringing the heart back to a beat again, okay? And then this is a shock wave. And then it gets all the way down to the point, and then boop, pops up. We got another shock wave, breaks down. Got a little shock wave, breaks up. Shock wave, break up. All the way up to the blow-off top that we saw earlier in June, okay? Excuse me, just had a smoothie. So blow-off top. Then what you saw was indecision, okay? These candles, it's like, just call them what they are. They're just indecision, okay? They're crap. So look at all the, oh my gosh, by the way, these are some of the most phenomenal candles you'll see in your entire life because they are a 22% candle, right? That was an insane day. I remember that day really, really well. I did really good during this time and I didn't see this coming. And I got too emotionally attached to my positions. And then I ended up still gaining, but lost money that day. Okay, so confusion, indecision, kind of call them the same thing. Like the market doesn't know which way it wants to go. So indecision. 3 days of indecision. Starts to look a little bit better here. And then, what do you know? Drop. Then shockwave. And then break up. And then drop. Now what are we going to do next, right? So that's what we're going to look at. And I've highlighted these two areas because this is order block data, which there's better videos of this on the internet if you care to find them. But how order block data should be really highlighted is for the upper order block is it should be from the bottom of the swing high, from the top of the body all the way to the end of the wick on the swing high. Okay, I did not do that here. It's because I based it off of the 6 hour, not the 1 day. And then same thing here. So it would be based off the bottom of the body and all the way down to the end of the wick on the bottom of the order block. Okay, but this is basically the shock wave that we are in. Big. Okay, it's going from 9 till 13,000. And that's why this line, you see I have this line tagged, it's a significant line. And we are mostly floating in this big bulky section here, which is just old order block data. Old why do I keep saying that wrong? Old volume data from VP, this guy. Where is he? Oh, he's not on this one. I'll show you in just a second. VPVR, I think it's called. Just the volume profile. Yeah, so let's jump down to 6 hour now. Okay, this guy right here. So going back to all the way back to 2017, I went back to get a lot of these numbers and a lot of these lines. That is what they're based off of. They're based off of historical data. Historical data is great, but it's a bit masturbatory too. And I think people do a lot of stuff wrong because it fits their bias, myself included. So this is what I did with this. I based it off the 6 hour, right? Maybe not. No, there it is. Okay. So I did kind of. Yeah. It's good enough. And then the bottom too, it's a little bit off because I actually like this order block section. Like if I were to move this whole thing up, so that way all these bodies are right through the middle of it. But again, that just fits my bias. So this range is what we are in. And on a 6 hour, you can see impulses and shockwaves a lot easier. Okay, way easier. So it's like, look, crunch it up a bit, and then we got shockwave, break down, break up, shockwave, break up, shockwave, break down, break up. Or we could consider this a shockwave as well, break down. Right. So just based on the time frame you're looking at, which is why to get confluence you should be looking at all time frames. So anyway, this is the range that we're basically in, and this is one big series of shockwaves, or even one big shockwave, depending on how this plays out afterwards. We'll be able to come back and be like, oh yeah, look, this whole 2-month period was one big ass shockwave before it decided to do something. Okay, so you can expect that this kind of range, it stays in this range until it really tightens up and it makes a decision, up or down. My bias is up. Most people's is, because most people want things to go up. They don't want them to go down. That is why most people long Bitcoin, and it makes you actually make more money with funding rates on future contracts if you do short, okay? Because nobody wants to short. Everyone wants everything to go up to the moon, and everyone wants to they think that that's how you get rich is when it goes up. It's not true. It goes up and down all throughout the day, and you can make money both ways. And that's the biggest thing. That's another big thing to take away from this, is that this price action goes up and down all day long. Next thing is that you don't need all this crap that I've got on here. You don't need, these are EMAs, or just, actually these are simple moving averages actually. You don't need volume profile. Well, this is useful. I like volume profile, candles, and volume profile down here. That's it. And then this orange line is a median line to show you when it crosses over that would signify big volume, right? So we've got these big volume areas, and then we've got this median line based during that time. Okay, so like, for example, those that are lazy or don't really want to trade but want to feel like they're trading, wouldn't these have been great times to just accumulate if your bias is that it's going to go up? And if your bias is that we are in the start of the bull market, which is many people's, myself included, then this would have been where you would just buy, whether you are on no leverage and just buying spot, or you're on low leverage, then this would be where, or high leverage, it doesn't really matter. This would be where you bought. Now we could come right back down into this area at least one more time, which is what I kind of think we're going to do. Yeah, so okay, so that's 3 hour. Now let's go down to technical, 60-minute. This just closed out 1 hour. I was watching it to see, because this here this is like chop to me, because this should kind of go like this a little bit and then make its decision on up or down. I'd say right now, based on Twitter sentiment, there is equal people thinking it's going to go up from here and equal people thinking it's going to go down and touch back into this zone one more time. Again, on lower time frames, you see just how many times it has touched into that zone. And all this gets messier and messier, right? Which is just clutter and distraction to make trading harder. And you shouldn't do that. You should make trading easier. So you know, if that was your trading strategy, is thinking that we're in a bull market and that you want, you think the price is going to go up, then all you'd really be paying attention to is popping in here throughout the day. You'd set some alerts on TradingView down here at these levels, down here, and even if you bought at this 94, but it went to and touched 9,000 itself, as long as you had your orders staggered in here, then you'd be okay. Staggered in here from, again, spot or low leverage. High leverage you would not be okay, but then it probably would hit all your stops. But as long as you had like order, stop, order, stop, order, stop, order, stop all the way down the line, you would have lost, you would have taken a hit. But still, if you're not going to be around, then that's a decent way of doing it. Set your stops tight so you're not losing a big amount of money, and keep your leverage lower, or maybe do cross on something like BitMEX. But then you would have already been in a decent position, and you would just be net long and chill. You wouldn't really be caring what's going on. Whereas people that are kind of jumping in and out of the markets much quicker are, sweating. Here's the 1 minute for all you psychos out there. I trade on the 1 minute too. I have like two strategies that I use. More of a just kind of sit and chill strategy, and then one that's way more physical, based on what these 1 minutes are doing and what the 6 hour is doing. So I get confirmation from the 6 hour, go in and attack on a 1 minute. But yeah, you could do, you don't have to just use those two. You could really do a mix of whatever you wanted. But the point is that how I explain things, how I just broke everything down, I hope makes sense. And it really is that simple. On low time frames, like a 1 minute, these moving averages are really important, meaning that they act as support, like they have here, and resistance as well. So throughout all of this, on the 1 minute chart, these act as support and resistance. On high time frames, order blocks matter, and so you can research that yourself and dig into that if you want more. But anyways, so that's my bias on this. I don't give price targets. I don't think it's important to get exact dates, exact moments of when to get in. I just think that it makes it easier if you just have a idea of what you want, and So then, like, this is what I did all the way up, is I did the same thing here, and this is where I was accumulating. And then finally it broke out of this range, and then I started selling some here when I saw it start to slow down, and I took profit here and I added, okay, and then went up more, and through this I took profit, added more here. So it's the same thing. So it's like on the swoop up, I'm taking profit, adding more here when it cools. Oh, yep, we're breaking out again. Okay. So I added here, break out again, take more profit, add more here, breaks out, take more profit, and then a bunch of bulls actually got trapped here, and a bunch of people lost their whole life savings right here, and all of these moves right here, which sucks. So anyways, it's the same thing here. So it's like, did I have to be perfect on my entry? No, actually my entries I think were pretty awful, but it didn't matter. I was using lower leverage, had it on cross, had a big enough balance in the account, and that was it. So like that right there is a very simple strategy you could apply to this. So we're in this range. This is obviously a very significant line here and a very significant level that we will have to break. There's a ton of people who are going to wait until we actually get above this before they would even enter. And that would be reasonable. So this whole section here, you could just wait until it really broke out of this right here. Right? I know a lot of you are thinking like, oh my gosh, that's thousands of dollars that you're missing out on price moves. Well, when you're looking at a $20,000 price target or an $18,000 price target, you don't really care. You still got $7,000, $8,000 of room there. And that's what I think is the big difference between somebody who's not only has conviction in their trading and confidence in their trading and somebody who doesn't. Somebody who's a newbie or a beginner is that, their opinion sways with the wind. And that's really, really bad because they're, flipping back and forth. So it's like, they'll see a big green breakout candle. Oh man, it's breaking out finally, go long. And then they get, 100x, and then they get liquidated 2 minutes later when it turns red, and then they try and short, and it must be really stressful actually to trade like that and to behave like that. And all that is a reflection of their own emotional immaturity, because you have to be, you kind of have to emotionally have your shit together to trade in the first place, and especially trade in a market like this where it can move 20-30% swings in a day. You don't get that in a year in the stock market. Since the December low in the S&P, I think it's gone up like 22%. So I mean, huge difference, huge difference. Definitely not for the faint of heart. And there's way too many people in crypto still right now that want to get rich quick. There's a ton of you right now watching this video who want to get rich quick, and you're dismissing everything I'm saying right now. Yeah, I get it. All you really want is price targets. So those people will keep doing the same thing over and over again. They'll keep losing all their money, giving it to people like me. They'll keep getting liquidated, joining call groups, joining signal groups, wasting money, chasing down people on Twitter to try and get advice on entries and what to do, when all they really have to do is something simple like what I just showed to you, and you would have a better grasp on the market than probably 90% of the crypto market right now. Pretty ridiculous, right? So just to show you this, like on a 6 hour, so this is a huge volume node, and this huge volume node coincides with a ton of actual price action that we had. This is like a week of time, right? So it's the same thing here. We've got a huge bit of node here, and this is where we're spending months. We will spend months here. We already have since June, so it's July. So we spent almost 1 month in this time, and we'll spend at least another week ranging like this before anything happens. Now, don't get me wrong too. This could range here and break down just as much as it could range here and break up. I'm just telling you my bias. My bias is that it breaks up. Okay, so here we go. This is still, let's go back and look at this. Yeah, so this is still just like hanging out. This is acting as serious resistance. You see this big volume node here, like I told you. That's the start of it, and then there's another one, big one, right at the other end. So that's why this whole area is highlighted. Huge volume from not only 2019, but 2017 in the bull run back then. So that's still acting as massive resistance. And your 1 minute is a battleground, okay? Lots of money to be made on a 1 minute though, and especially if you want something to do. Okay, that's all I got for you. If you like this, this is on the Crypto Junkie channel. We're going to start to bring this channel back by uploading videos like this. If you like this, then go ahead and subscribe and go through some of the other videos. We have strategy videos that we used to use back from 2017. Some of this stuff is still relevant. I think it'd just be good for you to go through and listen to. And be on the lookout. We'll have more videos on the channel soon. See ya.